Welcome back to Revolut Wealth Manager. Just wanted to show you how I go about analysing stocks, so particularly stocks that are due to go ex-dividend. So I've downloaded a list from marketbeat.com, which is a website I really like. There's a feature on marketbeat.com where you can load a free of charge dividend diary. So I've just filtered on next week. We commence on the 14th of September. I've filtered the list on companies with a market capitalisation of over $10 billion. Of course, size doesn't guarantee success, but by filtering on companies over 10 billion, you're getting well established, mature companies. And from a dividend point of view, they should be quite solid in terms of long-term dividend payments and also growth. So once I've downloaded the list, I've added some information myself. Come back to criteria at the top. So I've added in sector information because I like to look at how that would fit in with my current portfolio. Obviously, period of the dividend payments important. That comes from MarketBeat. Yields, that comes. All of this information comes from MarketBeat. Current price, I've plugged that in, and I've also plugged in some analyst target pricing. That allows me to calculate upside. So the current price is probably out of date because I plugged those in last night. Target price could be out of date as well because I did it last night as well, but just in terms of an upside calculation, it just gives a feel for whether the price has any longer term development. Again, analyst ratings in terms of whether they're a buy or a hold. I've also pulled in from investing.com their technical analysis, which actually changes quite regularly, so it's a moving feast, but I've just put that in as another angle in terms of analyst viewpoints on these stocks. I've pulled in from MarketBeat as well how many years consecutive dividend growth these stocks have, the average dividend increase per annum, and I've also pulled in earnings paid as dividend, and then I've pulled in a couple of financial metrics just to give a flavour of the company's health in terms of price earnings ratio and quick ratios. It just gives a quick view on the strength of the balance sheet in terms of assets and liabilities. So just to talk through my criteria for trying to assess which stocks I would like to invest in before the ex-dividend date. So just to be clear, I think to hit the record date, to be a shareholder on record, you would really need to invest Friday the 11th today to make sure that you hit ex-dividend and shareholder on record dates next week, just to be safe. But the criteria I would use, I would want to be looking for a dividend yield of between 3 and 8%. Anything less than 3 I'm not interested in. Anything over 8 is a little bit too hard to believe. In terms of pricing upside, I want to see at least 2% upside between the current market price and the analyst target price consensus. In terms of the rating in MarketBeat, I want a buy rating. In investing.com, I want to ideally see a strong buy or a buy rating. I'd prefer to have over 1 year's consecutive dividend growth. Not to say that I wouldn't look at a company with 1 year, but I will give an amber colour to anything with 1 year, green to anything over. And then in terms of annual dividend increase, I want to see over 5%, so over 5% gets green, under 5% gets amber. Okay, so once that analysis is done, so in total we've got 28 companies that hit the 10 billion or more market capitalisation with an ex-dividend date of Monday the 14th of September. Now what I'll do is just filter on dividend yields by colour that are green. So that gives me everything between 3 and 8%. So that's whittled the list down from 28 stocks to 12. I'll then look to have an upside of a green colour. Let's further reduce the list to 7. I want a buy rating on market beat. I'm going to leave investing.com. I'll explain why in a little while. But I want to keep these stocks in because investing.com just gives another flavour. I'm going to keep the ambers in the growth as well, and that you can see they're all red in terms of annual dividend increases. So that's basically the list, and the decision I'm going to take today is to invest in MO Altria Group, KO Coca-Cola, and MRK, which is Merck and Co, which is a medical pharma company. I'm going to avoid digital realty, and the reason I'm going to do that is because the yield is quite low, 2.9%. I'll just open those up with the decimals a little bit. 2.9% yields on the cusp. Investing.com saying a strong sell. What's interesting about digital realty is the 11 years consecutive dividend growth. 7.1%. That P ratio for me is too high, and there's no quick ratio information suggesting some issues in the balance sheet. So I'm going to strip out that. I'm going to get rid of that stock, and to be fair, my personal choice is to invest in all three of these companies today. I've already got shares in Altria, so I'm going to increase my stake in Altria Group. I haven't got any of Coca-Cola or Merck, but I'm going to buy one share of each today, just a small investment. And I'm going to keep a note of these target prices. I'm going to keep a note of these stock payable dates, but I think these stocks look good. There's strong upside in price, there's good growth in dividend. Okay, Coca-Cola and Merck don't have great consecutive growth, but I think overall the financials look decent. I think Coca-Cola is a well-known brand, consumer staple. Altria, there's a moral argument with Altria because they sell tobacco products. So morally, I'm not that happy with Altria, but that's how I've made my picks for today. If you've got any other views, I'd love to hear from you in the comments down below. If you've liked this video, please like, subscribe, and I'll speak to you next time.